Away. It's time to check in with our finance guru, Justin Delante, at Lending for You. Good afternoon, mate. Now, the Finance Brokers Association of Australia, they're urging the government to help out when it comes to easing the burden that these interest rate rises have been having on people over the last 12 or so months.
Yeah, and look, it's not easy for anybody, but the Finance Brokers Association, that's right, of Australia, have called on the federal government to take some strong action to ease the massive financial and mental health pressures experienced by Australians following 11 interest rate hikes in 12 months. Now, Lee, I've been in the finance industry a long time. I'm not going to say how many years, but a long time, and I haven't seen the interest rates increased that quickly, or the magnitude of those interest rate hikes that quickly over my entire time in finance. And look, the FBAA believe that the number and size of those rate rises over such a short time frame could result in even worse economic and social outcomes than the problem the Reserve Bank was attempting to address, being inflation. And a recent survey commissioned by the association revealed that a large percentage of Australians with a mortgage were being forced to make financial sacrifices, sell assets, take on additional work, move to cheaper properties. I think one thing, though, Lee, that we're lucky here on the northwest coast. I mean, our average mortgage size is not $1 million like the Western Sydney, which would make things increasingly difficult. But they've sort of said, look, the community lenders, government, they've all got to work together to address this issue. But the Finance Brokers Association are saying that banks can't be trusted to do this without some government pressure. So they've urged the Reserve Bank to pause interest rate hikes for 3 to 4 months until the true impact has been evaluated of all those interest rate hikes. And it's also urged the government to compel banks to disclose the introductory new borrower rate or interest rate, as well as the current existing borrower rate. So they're the people that have already got their loan with the bank. So the association is also calling for a bit of a government inquiry into bank practices around disclosure. So all sounds well and good, but whether the government does anything about it, I don't know. And
that's really interesting as well, because I've covered it before. I mean, you were saying that we haven't even actually felt the full impact of these rate rises. It hasn't caught up yet. So would 3 or 4 months be enough of a pause to actually feel or get the catch-up?
I think so. It'd give them a little bit of an idea about where the economy is actually heading. And of course, we've mentioned before, there's some 800,000 mortgages around Australia that are about to come off somewhere between 1.99 and 2.5% to something that's closer to 6. So we haven't seen that yet, and that's because predominantly Australians have always taken variable rates. That we haven't been a country that has sort of taken fixed rates, but when the interest rates were so low, there's something like 40% of mortgages were on fixed rates. So those that lever from the Reserve Bank to curb inflation by making us not have to pay more payments and not spend so much money in the community hasn't had the impact yet.
Yeah.
And it's going to be interesting.